In this video, traders, we're going to talk about how to use the RSI indicator, some normal ways to use it and perhaps some other additional ways that you might not be familiar with. Stay tuned. Hey traders, a very warm welcome to you. All right, so RSI is the relative strength indicator. Now this is an indicator that's super popular with swing traders, day traders. I'm going to run through how we kind of use it, some traditional ways of using it, some textbook ways of using it, and a couple of extra bonus ways if you like. We'll hit the screens in a moment and we'll go through some other different ways that I've found are quite powerful. Now, this video, guys, is sponsored by, if you want to check them out, there's a link to the description below. CFDs, spread bets, multiple different markets, give you selection of platforms to use, MT4, MT5 or C-Trader, which I'm a big fan of. If you're interested in having no nonsense broker, very transparent, great customer service, then go and check them out, have a little through the website and see if they're right for you. See the spreads as well, super tight, and lots of different markets offered. So have a look, link in the description below. And we're going to hit the screens in a moment, but what I want to do first on the board is kind of run through some of the theory behind things. So RSI is relative strength, and if we move to this chart here, you've basically got a situation where I don't want to think about the formula too much. If you want to go and Google the formula, then feel free. If that's your kind of thing and you want to see how it's all calculated, fine. But really from a trader's perspective, all this is doing, it's oscillating between 0 and 100. So it's showing the relative strength looking back over the number of days that you're inputting into the formula. Now the default is normally 14 days. Keep it on the default if you're just getting used to RSI. Don't meddle with it too much. The smaller days you get, the more sensitive it's going to be because you're looking back over 5 or 6 days. The higher the number, the more look back, and it's going to be such a slower moving thing, a slower moving instrument, indicator, should I say. So stick to 14 days, right? So it oscillates between 0 and 100. The other thing to know is that overbought, these are kind of the terms you'll kind of learn with RSI, overbought is when the indicator is above 70. So that's an overbought condition. Oversold is when the indicator is below 30. And that's generally how we look at things. So if we look at this chart here, as the market starts to push up, if we're keeping on a 14 day look back, it's a daily chart, as the market starts to push up, you start to see that we get these highs put in as the market is higher relative to 14 days back. So that's basically what the RSI is doing. It's saying, hey, we are now in an overbought condition. In other words, we're thinking the price may well unwind a bit. Now, markets can stay in overbought conditions for a long period of time. Markets can stay in oversold conditions for a long period of time. We'll touch on that in a moment. But for now, just think that the market goes from overbought to oversold or kind of sits in the middle. When we're in an uptrend, we're in an overbought condition. That's why we can stay in overbought for a long period of time. When we're in a range-bound condition, perhaps if you look at this part of the market here, when market transitions phase from trend to range-bound, we then oscillate between 70 and 30, overbought, oversold, overbought, oversold. Right, so that's really how it looks. And I'll put some charts up in a moment to illustrate this point a bit more. But let's look at some of the 3 ways that we would use the RSI indicator. By the way, this is available on many platforms. It's definitely available on MT4 on the C-Trader platform. First one is to fade overbought and oversold conditions. Now, I'm going to put an example up here on the DAX. Now, you can see how the DAX sitting in a range-bound market, this is when it's best to use this type of strategy, when a range-bound condition and the RSI is going overbought and oversold. So when the market's in a range-bound condition like this, the theory of using the RSI is to fade the overbought and oversold conditions. So as price comes up into overbought, you're looking to sell the market or short the market or take profits on your long. As the price comes down and as the RSI indicator comes down to oversold condition, you're looking to buy, go long or cover your short. And the idea is that whilst it's in that range bound condition, you're constantly looking for overbought, oversold, overbought, oversold, back and forth, and trading and using that indicator as a tool to show you when the turning point might come. Now, one thing to note is as the market is turning back up, your little tip, if you like, is to wait for the market to curl and the RSI indicator to start to curl rather than trying to get it as it first goes into oversold, because you could get caught out. The market could go oversold, oversold, and stay oversold. You're better to just wait for it to curl back up and then take the trade and use the recent low as a place to put your stop. Okay, so That's fading the overbought and oversold conditions. If you look at part number 2 here, guys, use the overbought and oversold conditions as a pullback indicator. I've got an example for you here on the Dow, and this is an intraday example, and you can see how we're kind of trending and we're chugging along, and we've got quite an aggressive down move. Then we get a little pop, and that just pops the RSI up. And the theory behind this setup of strategy, and this is kind of a little bit unusual one, but it works very well, especially for you intraday traders out there, but also for swing traders. But we'll get in the moment why you might want to make some tweaks on that for this point. But intraday traders get a very heavy trend day. Sometimes you get a little pop in price and you want to sell into that, and the RSI is a great tool to say, hey, we're in a downtrend, popping up into overbought, let me sell into that for a transition back to lows, or at least some kind of scalp trade or some quick opportunity. And the same with an uptrend. Uptrend, first oversold condition, we're looking to buy that, go long for a further move back up. So that's quite a nice way to trade it. The third thing is to look at divergence, and I've got an example here for you on the NASDAQ. You know, NASDAQ, we're just pushing lower, and price pushes even further low. This is what divergence means, guys. When we have price, and we use downside example, you can see in this example that NASDAQ pushes to lows, NASDAQ then pushes to further lows. However, the RSI does not go to new lows, which you infer indicates that potentially we've got some strength coming into the market. The selling is not quite as aggressive as we thought. And so when you see this divergence, i.e. you see price going lower, but the RSI not going further lower than it was in the last low, that's divergence. That could be an indicator to position long. Now, personally, I'm not a big fan of just pulling the trigger bait when I see this. I'm more of a fan of saying, right now I might want to align myself on the long side. Can I use some other strategies and other ways to get on a trigger to get into the trade? But it might mean, hey, if you're short, maybe you start to unwind some bits. If you're long, maybe you want to start having a little nibble or picking some strong stocks. If we look at NASDAQ, maybe we pick some strong stocks within that. If it's a currency pair, you get the idea. So it's just really giving an idea that maybe things have changed a little bit. What we'll do now though, guys, on the 4th and 5th, I'm going to hit the screens and we're going to log into the CTrader platform, and I'll show you how I like to use RSI as a potential stop loss tool. Unusual way of using it, but works quite well. And the 5th thing is how we adjust the overbought and oversold levels when conditions change. This is important when we're in very, very trending markets, because being strict with this 70 and 30 can sometimes not do us any favors. Let's hit the screens. Alright guys, so this is the CTrader platform from Pepperstone, one of the platforms that Pepperstone offer, also for MT4 and MT5. Now, I want to kind of run through using the RSI as a stop loss indicator briefly, or stop loss tool briefly. So many times, we struggle to know where to position our stop loss, specifically if we're trailing. So from the end of a move, we kind of want to go, where do I come out the move? How should I know if it's going to continue? Great example here for you. FTSE, UK 100 on a 5-minute chart. Now this is intraday. However, you can expand your time frame out, push it out to a daily if you need to, and use it on the higher time frames if you're swing trading. So let's imagine we got short on this break to the downside or this drive, whatever it may be. Now, you may say, hey, I don't know how far this is going to go. So you can use the RSI as a tool and say to yourself, hey, on the first overbought condition, I'm going to come out of the trade. So as the market's pushing lower and lower and lower and lower, you say, right, well, when it gets overbought, I'm closing the trade. So here will be example, you've given it a chance, you finally get an overbought condition here, bang, you're out of the trade at 5,840 and you're in the trade or whatever it was here. Maybe you're further back at 5,940, 100-point trade. Now, this gives you basically the opportunity to use the indicator as a stop. Now, it's not a complete substitute. You want to, of course, use a stop loss if the trade doesn't go your favor, but if it does go in your favor, this is a nice tool to help run the trade and say, hey, you know what, this FTSE wants to continue 300-400 points lower. Great, I'm sure I'll take that all day long. However, I want to come out if we start to unwind, and I'm going to use the RSI as a bit of a tool. And this is kind of a little bit of a heads up to say I'm just going to stagnate. You'd end up sitting inside that trade for a long period of time. So nice little tool that if you're short, you're looking for to come out on the first overbought. If you're long, you're coming out on the first oversold. Now, like I say, it's not a complete substitute because sometimes the price can come all the way back before it goes oversold, but it's something perhaps to add in addition to what you've got already. All right, so now we're looking at another way to use it, which is to adjust the overbought and oversold levels. Now, we don't want to meddle with this too much, but in some circumstances, you're getting a drive in one direction. You're very rarely going to get the pullback right to oversold. So if you go back to the initial point here, I've got AUD JPY on a 15-minute chart. You can see this scenario here, guys, where we have the classic one of the first pullback to the oversold condition. We talked about that. After you've got continued strength, constant overbought, first pullback to oversold, you're buying, and then looking for a continuation. That's another great example of it. However, let's look at a scenario where you want to get on the trend a little bit earlier. And waiting for that, you might think, okay, I wouldn't mind having a nibble a little bit earlier on, the first kind of pullback. So you're going to have to adjust your kind of trigger points, if you like, for overbought and oversold. A way to do that is to draw your horizontal line, very easy in CTrader and all the platforms, other platforms as well. Put it at about 50. It doesn't have to be exactly on 50. Put it about 50. And what that will do is you use that now as your oversold technically. So you say to yourself, right, I don't want to wait for it to come right the way back to my 30. Fine, that's a nice setup. That worked quite well in this example. But sometimes when you've got a real runaway trend, you want to wait until it comes back to the 50 and then curls back up. So you've seen a big trend starting to push up. Now price pulling back to 50. Every time it's pulling back to 50 and pushing back up, there's your buy point. So you're adding and adding as it comes here. You're pulling back under. This is a kind of the sweetest spot, if you like. You've had the good uptrend, pulls back below 50, starts to rotate back up. There's your buy signal, and you're then continuing to drive that. Yes, it's a 15-minute chart. However, works very well on a daily chart as well. I'll show you another example in a second. But what you're doing is you're kind of saying, okay, we are so strong or so weak that I'm going to move my trigger level up to the midpoint rather than leaving it down at 30. If we go on something like an index, for example, if we go to, let's say the NASDAQ again, put it on a daily chart, you have the same kind of scenario where price has been driving hard and you've got a very, very strong uptrend. Again, you can tweak and adjust where you're going to get into the trade. So rather than waiting for the full oversold condition, you go, right, well, I'm going to wait here for this pullback to 50. You can even be more aggressive than this. If it's a very, very strong trend, you might want to move it up to 60. You might want to say, okay, well, actually, I need to be moving up to around this kind of 60 level and putting it here and getting in there. So in that case, you're going to be in on this pullback here. You're going to be on this pullback. You're buying more here. You're buying more here. You're aligning yourself with the conditions of the market. Now, don't go too aggressive and start ramping it right up, but just have a look. If it's a strong, relentless trend, you might have to push that trigger point up a little bit. 50 is a good spot, maybe 60 on the real strong trends. If you're a downtrend, flip it the other way around. And so you're basically saying when we unwind, the spring stretches and unwinds a bit, that's when we get into the trade, that's when we're following the trend. So useful for all these type of conditions. All right, guys, so that was the RSI, how to use the RSI indicator. Hopefully found that some value. In the description below, I was on the CTrader platform then showing you some of these charts in the RSI. Like I say, stick to the 14 for now. That's the standard setting for most default chart packages as well. And the best thing that you can do when you're introducing a new indicator into your trading is to just start to look at it in the charts and the markets that you like. So add the indicator on, have a look and see how it responds. Because some markets work better with the RSI than others. Some that are very jerky, kind of confuse the indicator. But when you've got these liquid, very, very thick markets that have more of a good ebb and flow and backfilling and rotations and drives and the kind of market conditions that we see transitioning from trend to range bound to this kind of stuff, the RSI can be a very powerful tool. So go and check it out. And if you like this video, a thumbs up, of course, is appreciated. Take care of your trading, keep your risk managed, and I'll see you in the next one. Goodbye.